Welcome back to the Money Gains podcast. We had probably one of the most spiciest autumn budgets of all time this week. I think it's been labelled as the biggest press budget ever on record. There was media circus, there was leaks, which we're going to get into with Andrew Craig, bestselling author, and Brian Byrnes from Moneybox. How you doing, gents? You well?
Good. Thanks. Great to be back.
Yeah. We've had you both on the podcast before, but I think you two are very well placed to talk us through what the hell happened in this budget and its effect on the British people as well. So we're going to get into the first part, which was something relatively hilarious which happened pre-budget, and it was the OBR leak. I'd love to ask you, Brian, first whether you felt like that was actually, a leak on purpose and the rumours associated with that.
I think on days like yesterday, you do have to find the humour wherever you can get it, and that was genuinely quite funny. Although we were watching it and you could see on things like BBC that they were just getting very angry with the fact that people were dissecting the budget before the Chancellor had even stood up. It's pure gossip and speculation, but the gossip and speculation was that it was not an intentional leak. It was potentially somebody working abroad and getting the time zones wrong in terms of BST. That is pure gossip and speculation, but enjoyable gossip and speculation.
Yeah, I mean, it had its effects. Like, I looked on social media, there was people coming out saying, like, I am the Chancellor, and delivering the budget speech, like, before she even delivered it.
What, done by AI?
No. Just like actual, like, people on Instagram basically making a video being like, this is what's going on in the budget, and it's before the Chancellor had even spoken, which was just absolutely nuts.
Well, I mean, I've seen a lot of stuff overnight saying that it was absolutely briefed. It was without question, it was leaked and it was shared. Now, again, you can't, that's conjecture and gossip and speculation, but feels like it is. And if it is, it's just, to me, it's just egregious. That is absolutely not, how things should be done.
Yeah.
It's so bad for the economy.
But we have seen it.
We've had kite flying
for years and years. And like, it does feel like maybe it's just us getting older, but it does feel like it's getting worse. And then as you go through the process, you've got the Speaker of the House of Commons standing up and rapping people on the knuckles and saying that the House of Commons should be the first ones to hear about this sort of thing. But like, there never actually seems to be any kind of repercussions about the fact that everything that was in yesterday's was leaked. Kites were flown for the last
week,
6 months. Like 6 months, really. It was just an incredidly long lead into yesterday.
And the changes, obviously, income tax, like, there was pivots which was spoken about in the press beforehand. And
what was that, 2 weeks ago? She did the press conference 3 weeks ago.
She did that, and then she came out a few days later and said that, in the press, that things were changing, and it was just a circus. And so, for one, I'm actually quite glad it's a relatively, past us now. Obviously, we have the repercussions of what it is, but, at least this pre-budget sort of circus is out of the way.
I only think the only good thing that could be said about it, to my mind, is that it wasn't anywhere near as bad as I feared it could have been. But But obviously, I think that's stage managed. That's like companies making sure that their earnings and estimates in the market they're gonna beat them or hit them or beat them. But
do you not think that's what they're aiming for these days? Is that they put out all of these kites, relentless speculation, relentless leaks, so that when it does come around, people say, "Oh, it wasn't as bad as it could have been." Yeah, we should be aiming for better. But
except that was what everybody I know in the city who'd had face-to-face meetings with Rachel Reeves before they were elected in, and there was this consensus amongst senior city people that, wow, she's actually pretty sensible, and she's actually listening, and she's engaging in dialogue. And then the first budget last year, the sense was it's not going to be that bad. It'll all be fine. She's been listening, she's been engaging in dialogue, and it was an absolute abject disaster. The national insurance, the impact that's had on unemployment, on everything, right? And I think, and people were just that actually last year was the other way around. I think certainly the consensus from sort of financial services professionals was it was far worse than we imagined it could possibly be. And then this year, happily, a bit of a relief compared to what we feared it might be.
Yeah, definitely. And, I think we discussed this morning, actually, in an event that me and Brian were at, that, the NI effects on businesses is now being passed down to the consumer through food price increases. That's why we see food inflation jump up in the recent CPI. And then we've got other like areas of, you know, hiring freezes and
the worst graduate recruitment, and then it's easy to point at AI. But you know, I mean, I've got friends whose kids are putting in hundreds of job applications. There's nothing there.
Yeah,
there are no jobs for graduates because, you know, if you tax the arse out of something, you get much less of it. It's like just mind blowing that we haven't worked that out after 200 years of knowing that that's how it works.
I think the big one to get right into this is obviously around this income tax threshold sort of freeze as well till 2031. That's been regarded as a stealth tax, or something which is, you know, more known in the financial institutions as fiscal drag. Can we get into the specifics of that and you know, what you're seeing on that front, Brian? Let's start with yourself.
Yeah, I think, look, it used to be referred to as a stealth tax, but maybe this is just like the echo chamber that we live in from a kind of personal finance perspective, but it does not feel very stealthy anymore. I think people are very aware of what they're doing. You see all sorts of calculators out there before and after budget of what the impact will be on you and your pocket. Yes, it may not be this month's paycheck goes down, which would have been the impact of an actual income tax rate hike, but it's really not very stealthy anymore, and it will impact more and more and more people going forwards. I think I heard this morning that something was that 1 in 4 people will be a higher rate taxpayer by the end of this parliament. And you could see in the OBR documents that were leaked beforehand, this by itself raises £12 billion, which plugs one hell of a black hole. So you can see why it's appealing to them, but it's a problem for all of us because it really does start to mitigate the motivation for people to work and work harder. So if you do manage to get a pay rise over the coming years, a lot of it is going to go in excess tax and the rest of it is going to go on cost of living and inflation pressures. So yeah,
it's still a tax, even if it's allegedly a stealth tax.
Very much so, yeah.
Andrew, what did you think about that as well?
Yeah, I mean, I with all of this, I just constantly want to take a step back and sort of zoom out and look a bigger picture. I made a comment on LinkedIn the other day that I tend not to try and, I mean, I'm here today, for which many thanks, but I tend to try not to sort of get too focused on events like budgets, because I'm trying to zoom out and distill down, you know, what works for people in terms of personal finance over many decades. But there does come a point where, you know, you just have to look at all the major national KPIs of our economy and the fact that at the end of the day, if you put tax rates up to these sort of levels, even however that is, you know, whatever that happens, but if the aggregate effect is that the state gets these sort of levels, it massively crowds out the private sector. And, you know, you and I have talked about this before, but we've lost half of our stock market listed companies in the last generation. You know, this year to date this year, the LSE's raised £200 million, right? 20 years ago, there were years where we raised tens of billions of pounds. There are hundreds of IPOs. These are all, to me, these are actually rather more important issues than what may or may not have happened to a specific tax yesterday, but it's all just symptomatic of this big picture problem, that this belief that, you know, that we're not grappling with the issues around why do we have to have such high taxes. And we were joking before you clicked record about me being criticised as being Tory boy. And, you know, I've criticised the Tories for 15 years. I thought they were absolutely awful. You know, there hasn't been a small government fiscally responsible, you know, it's probably since the 80s, right? Or maybe John Major. But actually, one thing I will say, the one, you know, indulge me for making a party political point. I thought one of the best things about yesterday was Kemi Badenoch's response.
Yeah, it was
which was super controversial and fruity and stuff. But I think when the incompetence and the dishonesty being displayed, which is, you know, I'm sorry, but those two things are. You started by talking about the leak, right? Incompetence and dishonesty exhibited by Rachel Reeves yesterday as a statement of unimpeachable fact, not opinion. I think we've got to the point where, for the benefit of this country and millions of people, somebody has to bloody call it out. So sorry, that's a slightly long and rambly answer, but
no,
that's my view.
I think you're right to question it. I mean, like, this stealth tax is going to impact people's pockets, right? It's the British public that are then paying for potentially what could be perceived as their mistakes, you know, over this like last sort of 18-month period. They haven't delivered on growth. In fact, growth forecasts were reduced.
But every single one of these policies is inimical to growth. And like anybody with a vague understanding of economics and how economics works, and particularly how company economics works, knows that. So it's literally Kafkaesque. It's Byzantine. It's Orwellian that they can constantly go, we're completely focused on growth, and every single policy is inimical to growth.
Well, that fell off over the course of the last kind of 3 or 4 months, and I'd level a different potential criticism at their door yesterday on the big picture stuff and also some of the more personal finance stuff that we'll get on to talk about. And it's just, where is the overall strategy? So it was for quite a long time about growth. In the OBR documents that came out yesterday, growth forecasts were basically kind of falling off a cliff, and then now start talking about other things. So from a politics perspective, I think you can disagree with people making decisions that you don't like if you can see the path and the route that we're on. And I think that's part of the issue that we have at the moment, is it's very unclear the path that we're on, or the path that we're on is not particularly appealing. We were chatting this morning that the Chancellor had 3 audiences yesterday, effectively. She had the markets, who she seems to have been able to appease. She had her own MPs, who she was able to appease as well with the 2-child benefit cap cut. But then she had the general public as well. And if you just look at the front pages of the newspapers, even the more kind of moderate centrist ones, 24 hours later, this does not look like it's been particularly well received. And from a financial perspective, we are all going to feel this in our pocket for the next kind of 3 to 5 years. We are going to feel it with our savings. We are going to feel it with our investments. People trying to get onto a property ladder have got a setback yesterday, and people saving for retirement as well. And all of that without an overall strategy that we can at least try and buy into, that I think makes it very, very difficult.
And to my mind, it's almost certain that all the KPIs are going to be far worse than the current forecast.
Yeah.
Because all of these policies retard growth. They slow down capital investment, they stop foreign direct investment, they send wealthy people abroad, and so to me, it's absolutely nonsensical.
To your point about sort of company management, right? Like so far Labour has raised spending by 96 billion. So 2.7% of GDP, and has raised tax take of 79 billion, so 2.2% per year. So that's a deficit, and that's what it will be by the end of the Parliament. So
but that's on the current estimates,
exactly.
Right? That doesn't discount the likelihood, the very high likelihood, in my view, that the GDP growth is going to be worse, unemployment's going to be higher, welfare rolls going to increase even more. Clearly, that's what's happened in the last year. It's going to carry on happening.
Yeah, one of the sort of Kemi's big response was around getting Britain working again, and the issues of the welfare system growing. Obviously, that was impacted by the 2-child cap benefit system, and we know that there's beneficiaries of that. Obviously, the government have said 450,000 people will be pulled out of poverty. That's fantastic, but there's also the issues of the extra 3 billion quid that it's going to add to taxpayers having to fork out and pay, which is largely going to come from some of this stealth tax. So it's a big problem. And I just don't see how they're going to manage to get out of this one, especially Rachel. It's just made me even more just despondent about a Labour government being in power at this time. And I know that's very bold to say, but it's just, it doesn't seem to be getting any better when that's what they keep promising us. So
yeah, I think just one point on that is all of us around this table know that economic growth is important, right? You need the economy to be growing because the other options are inflation or the economy is not growing, et cetera, et cetera. But having that as your key metric that you go out and talk to people about, and saying things like we've got the highest GDP growth in the G7, that means nothing to 99% of the people. They want to have money in their pocket. They want good jobs. They want secure houses. They want a decent retirement. Those are the things that we need to be talking to people about, and that I feel that this government should be talking to people about, rather than nominal or real GDP growth, which, as I say, we know is important, but nobody thinks like that in general day to day.
100%. So let's move on to one of the more personal finance aspects of this, and I think both of you will have some juicy points, and that was obviously the reduction in cash ISA allowances per year to £12,000. That's a big move from ISAs. Andrew, I'll start with yourself. What do you think about that?
This is such a misunderstood topic, right? But I think I think this. I did a post about Paul Lewis a few months ago on LinkedIn,
yes.
The BBC journalist, who had literally written an article, I don't know, it was in the Telegraph. I was about to say front page of the Telegraph. I doubt it was front page, but it was in the Telegraph, saying how he would never invest in the stock market. The arguably one of the highest profile lead financial journalists of the last 30 years, at the national broadcaster is on record saying, I would never invest in the stock market. And I think that's a national scandal, and it's a level of ineptitude and ignorance about what creates wealth. And I'll just take a step back. So the average Australian today has between 5 and 7 times more when they retire than the average Brit, right? And the reason for that is almost entirely because of the difference between their deployment of pension assets in their domestic equity market and equities, and the fact that we, through a series of ridiculous policy and regulatory decisions over a 30 years slow motion car crash, have driven £1.5 trillion or more out of equities and into fixed income, and indeed into overseas shares, and primarily US shares, and primarily through passive products. And this is incredibly poorly understood. And to me, actually, anything that redresses that, we've got to think bigger picture. It's not just 20,000, now people are going to be pushed into the stock market. It's like what that means for the economy and for the real economy, for if you like Main Street, that we have the ability for British companies to raise money on the stock market. The whole UK smaller company ecosystem is dead. We've raised 200 million quid year to date, as I said a minute ago. EasyJet raised 200 million quid to buy 737s in November 2000. Right, I was on the team that did the deal. You couldn't start an airline company today in London, right? So, but what I would do, and I'll just finish off on this point though, I still think it's stinking around the edges. It's de minimis. It's a drop in the ocean. It's kind of annoying for people who are particularly risk averse and want to keep their money in cash. I think the carve out for older, for pensioners to still be able to put the full amount in cash, I believe was the change, is probably a good thing on that basis. But yeah, we just have to think so much bigger picture about rescuing this terrible situation that we're just exporting all of our capital, putting all in fixed income, and impoverishing millions of British people as they reach retirement.
Yeah. I think you hit the nail on the head, but I would touch on this slightly, and I'll pass it over to you, Brian, is that Plum did a study and Hampshire Trust Bank did a study, and it was between 9 and 11% of people would move money into the stocks and shares ISA, which is the exact amount reason for them wanting to make this change. And so,
but most of them, you remember I cited that study last time we spoke. Most of them, a frightening number of them, will put that money into 2 tech stocks.
It's
not. That's why we need to think a bit bigger picture.
You're exactly right. Like if you look at an average portfolio, depending on where you're looking, it can be as low as 7 to 9% in UK equities, sometimes even nothing or less, right? So it depends on obviously that person and how they built that portfolio, but that's worrying, right? So even if there is inflows there, it's going to have such a tiny difference into such a small amount of companies, largely those sitting within the FTSE index, which is obviously not where a large part of that capital really needs to be, which is in small and medium-sized businesses to help move that economy. But to just round off this point, 56% of people would move money into a regular savings account as well. So not out of an ISA, into a regular savings account, which could be earning less interest or no interest if they put it in one of the high street banks' easy access accounts, which are offering you 0.1%. Brian, your thoughts on this?
Yeah, where to start on this one? Well, I think the first place that I'll start is I will say that Moneybox has both a cash ISA and a stocks and shares ISA, right? And we have relatively equal numbers of customers in each. I feel like that should be something that people will have to come out and say before they express their opinions on this topic, because you often see, we should cut the cash ISA, says investment only platform. It's like there's a lot of vested interests in this debate. If I was speaking completely selfishly from a Moneybox commercial perspective, we want more people to move over towards investing. We need to drive more of a culture of retail investing in this country, as Andrew has referenced some of the international comparisons. So if this was going to work, we would support it, but it will not work. I was a financial advisor for a decade before joining Moneybox. The second half of that was in a digital platform, basically, where you would just speak to 40 or 50 customers a week. Like nothing that happened yesterday would incentivize or support any of those people to take the leap from cash to investing. The reason that people don't invest in this country is very complex. It's very long term. It's cultural. It's behavioral. A short term fix, such as cutting the cash ISA allowance to 12K, is not going to create the confidence for anybody to start investing. So the issue is it won't work. If you do speak to some of those vested interests on the other side of the debate, when they're being honest, they will say, this is not going to create a retail investing culture by itself, but it's part of the puzzle. I would argue that it is a negative part of the puzzle and actually will incentivize the wrong behavior. £12,000 is still a lot of money to most people in this country, right?
Yes.
There are not that many people that actually max out the full £20,000 ISA allowance. I
roughly
have never done it.
11%.
I will never even get close to it.
Yeah.
Having said that, people do not like things being taken away from them, even if they're not going to use it at some stage in the future. One of the classic examples of that we've seen over the last couple of years is inheritance tax on pensions, which people have gotten very, very angry about. People that I've spoken to that I know will never be impacted on this because of nil rep bans and all that sort of stuff. But people don't like options being taken off the table from them. The cash ISA is the most popular and most loved financial product in the UK. And this is the politics of pissing people off. And if you piss people off, they're not going to do what you want them to do. And we want to create the confidence for them to start investing. And I fear this is going to have the opposite effect.
Yeah, I completely agree. And we spoke about this before, but I think education around ISAs is just mad. And so like it's already really tough to explain the differences between a cash ISA and a stocks and shares ISA and a lifetime ISA. Like trying to get somebody to understand that, and then having different thresholds. Like it was hard enough when it was 20,000 across cash and stocks and shares. And then
now it's
lifetime
tiered
ISA
and
4.
banded and even more complicated.
Now it's 4, 12, 20, and it's just it adds another layer of complexity to try and educate people around this topic, which, as we know, is just so important for most people, is to have at least one of these accounts open. When it comes to investing, choosing a stocks and shares ISA for me is one of the most important steps you can make, and it comes down to 3 things. What can I invest into? Are they trusted by their customers? And most importantly, how low are their fees? So after testing over 10 different providers, I have landed on Trading 212. They have an excellent mobile app with thousands of stocks and funds available, and they offer commission-free trading with 0 platform fees. Plus, they're fully FCA regulated and have FSCS protection up to the value of £85,000. And right now they're offering listeners of this podcast a free share worth up to £100 when you deposit just £1 into your account. So if you're looking for a low-cost stocks and shares ISA to start investing, it's hard to look anywhere else other than Trading 212. Use the code MGP for Money Gains Podcast to grab your free share today. That leads me on to my next point quite nicely, and I know you know lifetime ISAs are a big part of Moneybox's accounts and what you do, and I know you have some big thoughts around the changes that were muted there as well.
Yeah, I think, look, judging by what I said on the previous, my own standards on the previous answer, I'll come out and say we have the largest community of aspiring first-time buyers in the UK. We believe we are the largest provider of lifetime ISAs in the UK. So we obviously have a vested interest in this conversation. Having said that, in all of my interactions with the government over the course of the last kind of 2.5 years, and for some reason I am now involved in public policy, it's why I'm going grey rapidly. But we engage with the Treasury Select Committee's inquiry on lifetime ISA, and we called out, look, our vested interest here. But basically all we did with that was we showed them the data. We showed them the data of who is using this product, how they're using this product, how much they love this product, and how many people it's helped get onto the property ladder. So 250,000 people so far have bought a home because of the lifetime ISA. The other unseen bit with the lifetime ISA is gotten people into incredibly positive saving and investing habits that will stick with them for life. 84% of people who use the lifetime ISA say their savings habits have gotten better since they've opened the product. Because one of the things with the lifetime ISA, from a behavioral perspective, the monthly bonus is incredibly strong. So you put your money in, you get your bonus like 28 days later, you log into the app, you top up, you keep going. It is a brilliant behavioral product.
Yeah.
So it is creating these incredible saving and investing habits for a generation. Now, what the government said yesterday is that they are going to launch a consultation next year on the lifetime ISA and also potentially a replacement product for the lifetime ISA, which I just feel is completely unnecessary and creates massive unnecessary uncertainty for people already trying to get onto the property ladder in a very uncertain environment. And I feel like they've opened up a lot of different avenues of uncertainty across cash savings, retirement, which we'll get onto, from salary sacrifice, investing, and aspiring first-time buyers. There was a very long lead up to this budget with a lot of speculation, and I don't feel like, from a personal finance perspective, much, if any, of that was put to bed yesterday. I feel like more uncertainty has opened up for people.
Oh yeah, for sure. And it's like, yeah, it works. Why are you changing it?
So, but that you know, the guy Richard Tarlow came up with the idea of nudging policy, which I think might have won a Nobel Prize for economics. I can't remember. Anyway, don't quote me. But it's really interesting to hear your point you were just making about the behavioural adjustments. But I guess what I want to come back to, kind of given what we were just talking about in terms of stocks and shares ISAs, is if we can get that strong result from the behavioural nudge with the lifetime ISA that engenders a savings habit, it's got people on the property ladder, why can't we do it for stocks and shares so we can reinvigorate the British economy and get companies and entrepreneurs able to raise capital in the London stock market again, not have a dead London stock market?
So it is happening within the stocks and shares lifetime ISA, but it's relatively small at the moment. So the stocks and shares lifetime ISA is mostly used for the retirement purpose, which most people use the lifetime ISA right now for the home buying purpose.
But just quickly though, but any capital that isn't going into the home buying purpose goes into what?
Goes into a cash. Sorry, you've got the cash lifetime ISA and you've got the stocks and shares lifetime ISA. The next question is what do those investment solutions look like? Yeah. And I think that's a slightly different question because even if the cash ISA cut did work and you did get more people investing, they're going to go into a stocks and shares ISA where if they are choosing individual stocks, most likely they're going to be American stocks realistically, or then they're going to go into some global tracker or maybe even a UK kind of tracker fund. So I do not believe, even if that did work, that we would see much benefit in UK PLC.
But this is right in the middle of doing a 5 or 6 or 7 video series on passive versus active and the dark side of passive that's incredibly poorly understood. And it's this point that if money goes into UK trackers, it does not go into IPOs of smaller companies that could be the next EasyJet or the next lastminute.com or the next. And this is one of the big challenges we have, is that if a tidal wave of cash just goes unthinkingly, without regard to valuation, without regard to anything, into mega cap US, as it has been for the last 30 years, one rung down from that, and with new incentives, it might go into UK, the existing FTSE 100 or dare we hope FTSE 350. That does not change the underlying problem we have in this country, is that 30 years ago, we were doing hundreds of businesses were raising tens or even hundreds of millions of pounds every year to start new businesses, create jobs, create wealth, pay tax, grow and become bigger businesses. That's the big missing link at the moment. And I think we really need to solve that problem.
Well, I think you're getting to the crux of the matter, which is where is the overall strategy? What are you trying to achieve with retail savings and investing, right? Because you could be trying to do one of two things. You could be trying to get normal people to invest, generally speaking, because it's better for their wealth creation over time. We all know it better protects against inflation, et cetera, et cetera. For people moving from cash into investing, I would argue that a diversified portfolio of passive tracker funds does a decent job for them and their wealth creation. It does not do what you were articulating there, which is supporting UK PLC, supporting small, medium enterprises, supporting growth, all that sort of stuff. I don't think you can necessarily do both of those with retail saving and investing strategy, and it feels like that's what they're trying to do right now.
You used to be able to, because so Jupiter, Bailey Gifford, Aviva, BlackRock, Invesco, 91 Asset Management, and a couple of others have all closed their UK smaller companies acquisitive investment fund in the last few years. And for people, I start ranting on about it, and people are like, what does that matter? Like, what that means is that there are now, and the remaining smaller company funds in the UK now have 30 million quid in instead of 600 million quid in they had 30 years ago. We've got to solve that problem, because in future there will be no large stocks to go into big passive funds if we don't. This is I mean, it sounds hyperbolic, but this is a genuine problem for capitalism and for our species. And I'm slightly going off piece, but I am, because I think it's really important. And I literally don't think people in government in Westminster even understand these issues.
And this is a genuine question of those funds closing. Do you think that is a demand issue, as in people are just not, or a supply issue of those companies coming up to grow into invested in with those funds?
It's because all of the capital, hundreds and hundreds of billions of capital, whether it's institutional capital from family offices or is going into cheap ETFs. And it's the biggest dark side of passive that 99.9, financial analysts don't understand this stuff. There's so few people who understand this unless you've been involved with the smaller company ecosystem. But what it does is it stores up a problem 20 years from now where there are no new companies. Tesla's on 300 times earnings and valued at $2 trillion, and smaller companies can't raise money. And actually, I know this might be a bit tangential and random, but I talk about it because we have got to solve this problem, because a huge part of the reason the British economy is screwed It's because, and it's another reason that wealthy people are leaving, by the way. It's not just because they're greedy and they want to pay tax. It's because you cannot physically raise any money to do anything anymore in a way that you used to be able to.
And this is where it comes back to the overall strategy point of like, are we saying that is what we should be using normal people's stocks and shares ISA funds for? And I think there is a very strong argument that yes, it should be, or no, it shouldn't.
Well,
be.
smaller companies, because it's chicken
that's
and
the
egg.
conversation we need to be having.
Smaller companies return 16% per annum from 1955 till 2021, right? Wouldn't that be nice? You know, and even if we get anywhere near that, because that's where Games Workshop comes from. Or, you know, small companies generally grow at a higher rate than larger companies, and they're also responsible for 60% of turnover and 50% of employment. And part of the reason the UK economy is in such a pickle is because we don't have any smaller companies. You know, they're dying.
Yeah, I'd love to know your thoughts on, you know, obviously stocks and shares ISAs are a tax, you know, advantage account, which you can you know, just put your money to work and take it out tax free, and like that's the large benefit of having a stocks and shares ISA. But doesn't seem to be much benefit or education around putting money into UK products, or they've obviously muted that, you know, the British ISA, and that fell.
Everybody hated it.
Everybody hated it because it's not sexy, and it's not Apple, and it's not Tesla, and it's not you know, these AI companies which are fast and, you know, potentially life-changing returns for a lot of people as well. And I think
down 50% 2 years from now, quite possibly.
Exactly. But there's risk associated to that too. There's a massive risk associated to that. But this is where the education piece comes in. I'd love to know, like, obviously you guys have been thinking about this a lot. Like, what if you were given the keys, say tomorrow, as the Chancellor of the Exchequer, and you could reform ISAs in a way that helped British companies? Like, what would you do, Andrew? Do you think?
Well, I front and centre, and I so just want to sort of deal with something gets thrown at you all the time. So American companies are better, and passive funds are better than active funds, right? But okay, though that's totally failing to understand the counterfactual, which is okay. But if £1.5 trillion of our own pension money hadn't flown out of UK equities in the last 30 years because of structural changes and regulation and policy decisions, maybe British shares maybe British shares would have actually been a lot better in terms of performance, because it's very hard for shares to perform when £1.5 trillion is flowing away from them, right? Actually, British shares have performed remarkably well, notwithstanding the fact all this money has gone out. And by the way, as another general comment, passive funds technically can't support IPOs. Basically, there's no mechanism because these companies are not yet big enough to go into an index, and you can't automatically build a book for a £200 million IPO to buy a load of airliners or whatever you might want to do with passive funds. You're never going to be able to do an IPO. So I would genuinely argue that what we used to have was a system that functioned really well. It delivered delivered mid-teens annual returns, right? And it delivered loads of thriving ecosystem and entrepreneurs being able to raise money and new company formation and great new companies and unemployment and tax revenues and everything else. So why not just have, we used to have dozens of active smaller company funds that did an incredibly good job and had very, very good long-run returns, rather than the Mansion House Accord giving it all to the VC and PE community, who've still got to solve the problem of how on earth they exit all of their positions. Give it to active smaller company fund managers. That would be, or at least give a very large amount, because a relatively small amount of capital. Yeah, the Mansion House Accord should absolutely be looking at addressing the smaller company London ecosystem for the benefit of all of us.
And stocks and shares ISAs, would you do anything with those?
Yeah, and that's what. So if you're going to have a British ISA, don't just spoon it all into AstraZeneca and Shell, is the point I'm making, because that doesn't help anyone.
Yeah.
I think on this one, if I answer it more from a kind of personal finance or people's individual saving and investing side of things, you said if you had the kind of keys to the Chancellor's office, I firmly believe that this is not a product-based problem, like tweaks to the cash ISA, tweaks to the stocks and shares ISA, British ISA, etc., lifetime ISA. That's not going to solve the issue here of getting more people investing. It is very much a support problem, and that comes from financial education in schools up to financial guidance and the lack of accessibility of financial advice. When I was a financial advisor, I started off in kind of high net worth private banking. I was looking after 50 or 60 individuals and families. I then moved into a more digital environment, and this is still kind of 5, 6, 7 years ago, and I was able to to comfortably look after 1,000 individuals, basically, where they could pick up the phone, they could speak to me, they could pop me emails answering questions about their worries, their fears, what they should use, all that sort of stuff. We are now, like, the technology is obviously just rapidly expanding. We now have AI, ChatGPT, people turning to that for financial advice, which we can and we should talk about. But that is the problem that I would rather be trying to solve. How do we support people to make these financial decisions, to move from cash to investing, to save for their retirement, to consolidate their pensions or not, as the case may be? I would prefer to be solving those problems than doing consultation after consultation of what the individual products should look like.
And tiny tweaks to them.
Because all the products are there. Yes, some of them, in my opinion, have gotten a little bit worse after yesterday. But all the products are still there for people to be able to hit their financial goals, invest tax-free, all that sort of stuff. Where that money then goes to support UK PLC, Andrew is far more qualified than I am to answer that question. But I would have preferred to be working on that support problem, things like advice, guidance, boundary review, targeted support, financial advice for more than just 8% of the population. That's what I want to be working on. That's how you crack this problem from a personal finance perspective, rather than fiddling with ISA rules.
Because over time, that has a massive difference, as we know. But it's very difficult for a politician to agree that that's going to be something which is going to impact them in this parliament.
Yeah, that's it. That's right. But then again, we talked about this last time. I mean, I always get this slightly cheesy point I make is, 42 million British adults have a driving license, right? And if 42 million British adults had spent however many tens of hours it takes to get a driving license on learning about finance, everything would be different. Now, surely that's not that, if a government took the bull by the horns and tried to do that and said, right, we're going to have a national PR campaign about the important, why, look, all the rich countries in the world with the highest GDP per capita, what do they all have in common? They're really good at investing, right? Their pension systems are much better than ours, that far more people invest. So why don't we have a proper government-funded PR campaign to engender that level of knowledge and basically insist that anyone who thinks it's okay to get their driving license should spend exactly the same amount of time on getting their learning about finance license. It would be revolutionary, and if you pitched it right, I think people would respond really well to that.
In our line of work, I'm sure you guys get this as well, people asking for tips and hacks and what should I invest in, how should I save money. Like, my answer to that is always disappointing to them, I think, but it is practical in that it's 30 minutes a week. You need to be spending a minimum of 30 minutes a week on your personal finances. And that can be shopping around for a savings account. I always think people should have a notes app on their phone that says, okay, this is a finance term that I don't understand that I've heard this week, whatever it might be, ISAs, salary sacrifice. You spend your 30 minutes figuring out what that is. 26 hours over the course of a year, you'll be amazed about how much more financially
100%.
confident that you feel at the end of that. We now have 1.5 million customers, and basically part of my job is setting them a little bit of homework on a weekly or monthly basis, saying this is the sort of things that you should be learning about. And the irritating thing about this budget is I might be wildly optimistic, but I do feel in some of these areas that we are making progress. Like, you have seen this from your channel growth over the course of the last couple of years. The appetite is there.
Yeah.
People want to be better with money, and they want to tune into, hopefully, things like this, but like communities like yours. The Finfluencer community is massive and shows the appetite that is there for people to learn about this stuff. We did an investing webinar not that long ago, and we got 13,000 people on a Tuesday morning tuning in, learning how to invest, which is me droning on for 45 minutes talking about what is a stocks and shares ISA, how do you use it, all that sort of stuff. So the appetite is there, which is why yesterday, to me, feels like a little bit of a setback, but I will remain optimistic.
Yeah, well, we have to. This is what we do. I think we'd all be pretty bored if we couldn't talk about this in some capacity. So, I think we jobs perhaps made a touch harder to explain this. And you're right, like, that piece of being taken away from you and changing it just makes it like even more people are just going to be like, well, and bury head in the sand. And as we know, that's the problem.
I think, so just very quickly, a very important thing is, like, I don't think anything from a personal finance perspective actually changed yesterday. A lot of these changes are going to take quite some time to come through. So the cash ISA stuff isn't until April 2027. The lifetime ISA stuff may be April 2028 before something replacement comes along. And then the salary sacrifice, like 2029. We have already had questions in from customers in the last 24 hours being like, oh, what should I do with my savings? What do I need to do with my lifetime ISA? What do I need to do with my cash ISA? You don't need to do anything right now. Nothing is changing immediately. There is plenty of time to to react to the changes that were announced before they're implemented in at least a couple of years' time.
Yes. And the way a lot of press and online content which has come out, which has been frustrating for me. Like, we make a literal point about not covering it. We cover it on the podcast today because it's a more longer, nuanced piece of content for someone to consume with a lot more context. Whereas a 50-second Instagram saying what's happened in the budget just scares people, and so I've always stayed away from that. And I think it's really important. But there was another big change for us was the savings tax and a 2% basis points there. Obviously we've discussed around the 56% would move money into a regular savings account. So that's going to tip a lot of people over the edge. Then we have this stealth tax of people moving up the thresholds. So actually this 2% basis points increase in savings tax is going to be a big problem for a lot more people than I think we foresee. And that's another angle of them sort of grabbing from us without necessarily saying we're putting up your wage pack,
Even more important, people learn about stock market investment, right?
Yeah.
Because you've got to beat inflation and you've got to beat tax. And, now but look, if you contend as I do sort of philosophically, that basically inflation is M2 money supply, actually, monetary debasement, real inflation rather than the nonsense numbers produced by the BLS and the ONS and whoever else, is the actual experience of people's increase in the cost of living, is probably closer to M2 or even the gold price, although that's a bit punchy.
What does that mean if there's someone that's listening to this?
So M2 is a measure of the aggregate money in the economy. So if we're so that's bank deposits, cash in circulation, et cetera. So it basically, I've said this on podcasts with you before, but if the supply of money is 1 and the supply of real tangible stuff like timber, crops, metal, cars, whatever is 1, if the supply of money is now 2 and we haven't got any more stuff because people haven't had time to manufacture things or grow crops or whatever, the price is now 2. And that is a vignette of what's happened in the whole of the world economy in the last 40 years, which is why we have a cost of living crisis more than anything else. And so if you believe that you have to run faster than that to be wealthy and to build real wealth in your life, whacking another tax on what you're going to be able to earn in terms of on your savings makes that even harder. So people are basically you're basically guaranteed to be underperforming real inflation, your real world experience of the increase in the cost of your living, pints and pasta and eggs and milk and bloody everything, and cars and everything, and energy, thanks to the other egregious incompetent policies this government has. We can get into that in a minute, but it's a much heftier tax than it appears to be in terms of how it impacts people's ability to become wealthy.
Inflation plus savings tax.
Yeah, correct.
First of all, thank you for not asking me to explain M2 money supply. I had massive flashbacks of economics lectures there, which I did not do particularly well.
To be honest, I couldn't quite remember what exactly goes into M2. It's like it is cash on deposit, cash in the banking system, blah, blah. It goes all the way up to like M6 or M7, which is credit card debt and blah, blah, blah. And whatever. But anyway.
But on your question of the savings tax, dividend tax also went up by 2 basis points and property tax as well. I was quite surprised in the OBR documents about how much they're forecasting that will raise. I can't remember the exact amounts, but it was more than I thought it was going to be.
And they won't.
They
won't raise it. But they just won't. They never do. Every time corporation tax goes up 5, 6, 7%, the tax take goes down.
Yeah.
It's called the Laffer curve. The government doesn't seem to understand these basic things that have been around for 200 years.
One of the best things about the ISA environment that we have had over the last 25 years, it's been relatively simple. It's been easy
and relatively stable.
Especially like the cash ISA. You can basically tell people, look, a cash ISA is a really good thing.
Yeah.
Pop your money into it. You won't have to pay tax. You won't have to worry about any of this kind of savings, interest tax, your personal allowance.
And you still can.
Like you still can, but just all of these little tweaks, and especially now, having different allowances for the cash ISA and the stocks and shares ISA, that's going to be kind of a bit complex. Like what happens with transfers between the two of those products, like we'll probably find that out over the course of the next 12 or 18 months.
Yeah.
But one of the major benefits of ISAs has been how relatively easy they have been to explain to people when you are doing kind of financial education, and every little tweak like this just makes that job a little bit harder.
Yeah. And the dividend tax is a tough one like for me as a business owner, because I'm already paying corp tax, VAT, and then if I want to actually take any of that money out and use it, well then I've got a dividend tax on top. So for every £100 that business earns, if I wanted to take that out, I've taken 25-30 pounds of it if I'm lucky, which is just wild.
And how many thousands of people who could be building business in the UK are going to say, I'm going to go and do it in Cyprus or Malta or wherever, right?
Yeah, exactly.
And every one of them matters.
Yeah,
despite what people like to think.
Yeah, absolutely. Well, you mentioned something there, Brian. Mansion tax, property tax. That was a big part of this budget. Properties over £2 million and scaling upwards in terms of the amount that would be collected via council tax, which is a very interesting move. I think it was heavily documented in the press about a wealth tax and how they would do that. I think that's your answer in conjunction to a wealth tax, and again pissing off probably more millionaires than they needed to, and an elderly couple who live in a house they bought in 1987 that ostensibly is worth £2.5 million, of which there are tens of thousands throughout the home counties in London, right? Whose income is actually bugger all because they're retired and they're on, maybe they've got a crap pension that's not even. They don't want to sell up the house, I mean, that's the problem with these things. And also, I don't know whether you saw this in any of the output yesterday, but what's the valuation metric to decide whether a house is worth £2 million or not?
Well, this is another area where they've just created uncertainty because they said they're going to consult on the details. So they said that they're going to consult on people also who are asset rich but income poor. So they have a £2 million house, but they have no mechanism of paying these additional kind of council tax bills. So they said we're going to consult on measures that will help them.
Which by the way, will be a huge chunk. Yeah, like a really meaningful percentage of people who own a £2 million house will be elderly and with very low income. Yeah.
And one of the potential kind of speculative policies has been that the council tax bill will roll up until they sell or until they pass away, and that's going to have a distortive impact.
So and then the buyer pays it.
Yeah. Well, who pays it?
So nobody buys the property. It's just nuts, isn't it?
Or they have to reduce the value of their house to say 1.99
But that's what they're saying. If you own a £2 million and 50 grand house right now, it isn't anymore. It's a £1.995 million house. Mm-hmm. How many people's equity has been wiped out?
Yeah, so you're wiping equity out. Because actually, even if you're probably at 2.53 mil, you're like, well, actually, I'll take the 1.9 because no one else is going to.
Well, and then you've also got a mark to market to show your house is worth less than 2 million, therefore you shouldn't pay the tax each year.
Exactly.
Right.
But then how long does that last for? Because as we know, property prices increase. So then how many properties then go into that threshold while that price is going up? So,
and this is what I mean, like we had such a long lead into the budget and people are saying, oh well, thank God it's kind of been and gone, but there are so many areas where they've just created more uncertainty. As I say, this is just another one where there's a consultation of like how this will actually be implemented. It's the same with cash ISA, which we're not going to know how that's going to be implemented for a while.
I predict that the costs of working all of this out will probably exceed the tax take they'll get from it.
Exactly.
That is my genuine belief.
I was making this point.
If they're honest.
That is definitely the case in my view as well with the lifetime ISA side of things. So creating a new product from scratch when you could put minor tweaks to improve the product that is already there is just a false economy.
The communication alone between all of you would be nuts. And, then you've got the property tax thing. And it's just like, why are you spending all of this money on this for such a small outcome? And actually, the only thing you're doing is annoying people.
Because it's entirely point-scoring party political, isn't it? It's because horrible rich people who own £2 million houses, your base, your electoral base, wants them vilified and wants them to be boogeymen. It's not actually about raising proper amounts of money for the economy or improving the British economy.
I would argue...
if you can be a cynic, but I think that's probably true, right?
No, I agreed. And I would actually argue a large portion of the wealthier individuals in this country are okay with paying tax as long as their tax is being used efficiently on the things which actually make a real benefit to the working people of this country. But as we know, we've seen the government logo redesigned recently for a ridiculous sum of money. The number escapes me. And there's consultation fees, like even the Australian government as well. I saw
they just spent 100 million on a website, which a teenager could have vibe coded. Yeah, that was Daniel Priestley, wasn't it?
Yeah, exactly. So there's all of this going on. There's gross mismanagement of what's being spent already, and there's a large part of looking at that.
But it's not. I don't think that's just wealthy people. I think that's all of us.
Everyone.
And
Yeah.
I think
Totally.
you mentioned in terms of how much tax has been raised by these kind of two budgets, and it's a frankly ridiculous sum. But I don't think people would disagree with that too much if they could see the impact of where that is going. And I think with the amount of tax that has been raised via different mechanisms over the course of the last two budgets, people are going to want to see results pretty quickly in terms of things like public services, like where is this money going?
Yeah.
Or else I do think this is probably one of the few kind of political things I will say today, is that I do think they will be in trouble if people don't start to see an impact of where all of these tax rises are going and real tangible differences and improvements in day-to-day life.
Yeah, no, absolutely. I want to touch on salary sacrifice because it's a big deal for a lot of people. And this one wound me up a touch because if you look at the data of people earning £100,000 with children and they get to that point, the data shows that they either stay at exactly that salary or they don't take salary increases because of the amount of money which they receive from child benefit. And that is just nuts. And then if they are on £110,000, well, they salary sacrifice down to allow themselves to be under those thresholds and still be able to, run a family household, which we know is extremely difficult for people at all levels of salary. But there is this real cliff edge already in place. And then they've now just made that a lot harder for people as well. With £2,000, you can take in salary sacrifice without paying NI. And this is from 2029, though, which is a long way from now. But even so, it's a big, big change for a lot of people. What are you seeing there yourselves?
Well, I mean, anything that disincentivises. One of our biggest problems as a country is the average person's getting to retirement with, it depends on whose data you're looking at, but somewhere between 30 and 50 or £60,000 a year, right? Which is peanuts and basically promises you an impoverished retirement. And
the average amount is between 68 and 75, depending on who you're looking at.
Exactly, depends on which data you're looking at. And it's men have far more than women, and exactly right. And anything that disincentivizes people sorting their pensions out. And as I said a minute ago, and I'll say it again because it is so eye-opening. The average Australian, and we're not talking about rich Australians, we're talking about working class, blue collar, ute driving Australians. They have 5 to 7 times more in their pension fund at retirement than we do because of how enlightened the super funds infrastructure they put in the 80s has been and ever since. They have great policy. We go in the opposite direction. So, if we want our pensioners not literally being utterly impoverished and living on cat food, these are the right sorts of policies.
Yeah.
That's really depressing.
Brian, what do you think about the salary sacrifice changes?
I mean, you said it wound you up a bit. It wound me up a lot.
I was
furious, very angry about this one. I think with some of the other stuff that kind of came out yesterday, you can kind of squint and you can see the logic. This one, I just cannot see the logic at all. We have a massive retirement crisis in this country.
Yeah.
All of the metrics that Andrew said, we've got 15 million people under saving for retirement, and it is very much a ticking time bomb. So anything that disincentivizes people from saving for their pensions is just nonsense in my view. It doesn't come in for kind of 3 or 4 years. I think a couple of the knock-on implications of this is, one, it's effectively another tax on business. So for people that are contributing and go over this £2,000 limit, they'll probably pay either 8% or 2% national insurance contributions, but businesses will pay, 15%? So it's another tax on business. The administration is going to be a nightmare from a business perspective as well. Even minor things like 2,000 does not divide by 12 easily on a monthly basis. So trying to work out that for a business perspective of what national insurance is due is going to be a nightmare. And then also, it's just the narrative on this stuff. So again, I revert back. People don't like things being kind of taken away from them. And especially when you talk to people about pensions, the narrative is that pensions are getting less and less and less appealing. And yes, little tweaks like this do not help. But pensions are still an absolutely fantastic product. They're the best product that we have to help people save for their retirement. And even with these tweaks, they're still incredibly tax efficient, and they are the best way to save for your retirement. And little things like this just make people throw their hands up and say, I'm not going to bother. And maybe they'll save into a cash savings account, or maybe they'll put it into a stocks and shares ISA if we're lucky. Realistically, they're just not going to save for their retirement at all. It's a massive, massive narrative problem that they've got here. And I think this one just looks to me like I can't even squint and see the logic of why they're doing this.
Pensions, for me, is a branding issue anyway.
We should call it a future fund. That's what Iona Bain calls it.
Yeah.
So I think it's a great call.
Yeah, no, I agree actually on that one completely. And there was I love Rory Sutherland. I think he's just such an absolute gent, and but he was saying it would be really interesting if because there's a lot of money locked up in people's pensions and they're in their 30s and they're struggling to get on the housing ladder. So could there be a mechanism where some of it could be released, or some of your tax relief could be released to help you towards your home buying? And I thought that was a really good idea, because it would then incentivize younger people to get involved way earlier, because they know that money's coming across into their pension could.
Although it would, but it
is, but
that's got different tax benefit on the way in, right? But it would also be a one-off exogenous shot to the UK property market, which would just lift UK house prices all in a big one, and all our house prices would go up and erode the advantage. Which is what pretty much every policy's done in the last 30 years in Britain, right?
That's
the only thing that's gone up is house prices, because if you make it easier to buy houses, everyone's obsessed with property in the UK and only invests in property and cash, and it just makes house prices egregiously expensive and prices out young people.
Smaller stock will mean higher prices too. So it's a lose-lose situation.
Well, you'd have to build a hell of a lot of houses to stop that from being yet another
and that was one of Kemi's points yesterday about their
missing
targets on that, and that was Rachel Reeves basically said we're on track, we're on targets.
But those targets were always complete bullshit, right? Because
1.5 million homes.
But every single person involved in the house building industry in the UK, all the big listed house builders said there aren't enough plumbers or electricians, or there aren't sparkies. There aren't, we that's just physically impossible.
Yeah,
unless we import tens of thousands of plasterers from wherever we can find them, which we're not going to be able to do. It's just
back on your pensions branding point, I do completely agree with you on that, because if you can capture people's attention long enough to talk to them about pensions and their eyes don't glaze over completely, you can pretty much convince them of how good pensions are within about kind of 5 minutes, really.
Yeah, exactly.
I think when people don't think about it, or haven't had the financial education or whatever it might be, people think about pensions as a trade-off between £100 now from your paycheck and £100 30 years in the future.
It's not. It's 115,000 or 1,500.
The only logical thing to do in that trade is take the £100 now.
Correct.
But when you explain to them, look, you've got your tax relief, so it's actually not £100 now. It's either £80, £60 or £55 if you're in additional repair. So that's what goes in. You then get the tax relief, which tops it back up to effectively £100. You then get your employer contributions if you're in salaried employment, and then hopefully you get tax-free investment growth for the next 25 or 30 years. So it's a trade-off, if you're a higher rate taxpayer, between 60 quid now and, I don't know, guess kind of 400 or 500 quid 30 years into the future.
At 8%, it's 1,500.
Which, people are just, okay, that makes a lot more sense, but it comes back to that kind of financial education and branding point, because as soon as you start to talk to people about pensions, you're just like, eyes closed.
But the way, the only silver lining to your point about this not coming until 2029 anyway, I mean, the silver lining on the cloud yesterday, and again, I really genuinely hate the fact that this has all become so party political. My hand has been forced, right? Because I'm a Benthamite, I've said it to you before, I care about the best possible outcome for the biggest number of people. And if I see a government doing something that's really, really prejudicial to the life experience of millions of people, I can't resist talking about it, and I have a view on it. But I think that where we're at now, and, there's a week is a long time in politics, right? So who knows where we're going to be in the next general election, but will this ever really see the light of day? I mean, if this comes in 29 and Kemi Badenoch keeps performing like she did yesterday, and people are as pissed, because this is my contention, all of the KPIs are going to get worse. We're going to raise less tax, growth is going to be worse, unemployment's going to be higher, but overseas investments going to disappear, the stock market's going to get worse. The headline performance of the stock market might actually be quite good, because there are loads of FTSE 250 companies which will get acquired by the Americans, not because of the strength of the UK domestic economy, which is another point that people who don't understand these things don't understand. But I think it's
correlation between markets and the economy is
negligible,
thing.
exactly.
Yeah, exactly.
But I do think that so many millions of people are going to have such a bad experience in the next 3 or 4 years, that the one saving grace is this policy, this change to the pension policy will never see the light of day, because it will be somebody else with a better policy, I hope.
Yeah, either a change there or a complete change in government.
Even the Labour might have made a decision to change it by the time we get to 29, right? So
exactly, and that's like with the stealth tax thing. It's like it's going to raise this amount and it's going to raise growth and do all of these things until 2031. But there's a general election that has to happen in 2029. Yeah, it has to happen. So we've seen the polls. Doesn't look like they're going to be in power.
Well, yeah, but there's a point where, week's a long time in politics, right? That can change very quickly. We've seen that so many times.
Absolutely. But. And, we could have another pandemic, another crisis, another thing where Labour managed to extend that, and it's happened before and could happen again. So I think, you know, that we've got to take these things with a pinch of salt for now, but it was worrying for me on salary sacrifice and you know, those pension assets as well.
Well, I did say I'd stick to the personal finance side of things rather than the politics side of this, because, as I say, I'm...
You're doing a good job on that.
I wish I could. I'm so angry. I just can't anymore.
I'm from Ireland. I came over kind of 12 years ago, so I don't have any kind of party political kind of bias. But it does concern me that a government of any colour that got in 18 months ago with a massive majority is not being more ambitious with a more clearly defined strategy over the next kind of 3.5 years. Because we talk about polls as if there's an election in 6 months' time that they're preparing for. Yeah. There isn't, but they need to show with all of these tax rises and the announcements that they're making that they will be able to stand up in 28, 29 and make a reasonable case of what they've done over the last 5 years.
Yeah, and things could play out very differently.
But they've broken all their manifesto promises. That's the other point. Like, I've never known anything like it. I mean, we all know that we all have misgivings about politics, but this is the first time in my adult life that I've seen a party go, we will absolutely not do this, we will absolutely not do that, we'll absolutely not do that, we're going to go for growth. As I said earlier, Rachel Reeves was going around the city seeing everybody who was willing to meet her in the city talking a really big game, and people were relieved, saying, actually, maybe we can trust Labour this time, maybe they won't completely blow up the economy and destroy it, you know, and supercharge unemployment and make it impossible for anybody to get a job and drive thousands of people offshore and have all our companies fall on their arse, which, by the way, is absolutely what is happening. And then they came in and absolutely did a volte-face and 180'd on all of the things, which is, you know, that's, for me, that's unforgivable. That's why I care.
No, I agree.
You know?
I do agree there. The break of the manifesto was one step too far for myself.
Yeah, again and again and again and again.
Look,
right?
I want to, just to be clear, like, I think we all want, like,
the
positive outcome, and it just frustrates me when you have, like, cabinet ministers which have never run a business making business decisions.
Exactly.
You have chancellors that have, you know,
became an MP at 31 years old.
Exactly.
So I think we should have a rule. You should have 35 years of front office experience in a major, you know, capital markets role before you can become chancellor.
Oh, okay, interesting.
I don't know. You can't legislate for stuff like that, but that should be it should be a convention, if not a rule, right?
Yeah, or at least an outstanding track record at doing good things to be able to do this, and like that's why I struggle with this a touch, and you know, I think that's only been exacerbated over this past 2 budgets. Really,
I'm going to talk about one positive.
Go for it. I've got a couple of positives.
Positive thing.
I was going to start with them, but we went in there.
It's help to save on your list. This is something that more people do need to know about. And if you're looking for some sort of, I'm not going to say it's a silver lining from yesterday, but they have expanded the help to save scheme, and more people will be eligible. Because
it was only eligible for universal credit.
Yeah, and they've expanded it now to a different range of benefits. It is an absolutely brilliant scheme. If people don't know what it is, you can save £600 a year into it, and the government will top it up by 50%. So you get an extra £300, and that runs for 4 years. You don't get that return on your savings elsewhere, and it is generally people on universal credit and other different types of benefits that need help with their savings. It's a brilliant scheme. Not enough people know about it, but yesterday they said they were going to make it permanent, and they said they were going to expand the eligibility for it. So, as I say, if we're looking for little bits of positives here and there, help to save, more people need to know about it. Tell everyone you know that could be eligible to check their eligibility.
Use that scheme rather than the local loan shark who'll break your legs if you don't pay them 500% return.
Yeah.
Well, that's the marketing campaign for it. Yeah.
Or
you don't get your legs broken.
You know, or Coral or something like, you know, there's those.
Well, that's the other one, isn't it? The betting changes. Yes. I didn't realize something like 1.5 million people are addicted to gambling in the UK. I didn't realise that.
Yeah. It's very high, and so there's going to be changes to that too, which actually is welcomed. You know, vapes, all of these things, I think is, you know, obvious and
fair
should be
game.
in place. Yeah, fair game. Go after the things that are fair game, just not our savings and our pensions and our assets, please. Like that would be great. There was another one I'm going to just bring up, but one that frustrated me a touch was the EV changes, and you know, right now you can charge your EV if you're smart about it. If you get a timer, you can charge it for a few quid, and that's going to get you 300 odd miles. And you know, obviously there was tax breaks on your road taxes, etc., and all of these things, which have been really beneficial to get an electric vehicle, which, as we know, is important. Obviously, the infrastructure spend on that and getting more, and they're pumping money into EVs too, but charging points and stations. But there's now a 3p per mile for electric vehicles and a 1.5 pence per mile for hybrids, which if you equate that to, so it's £3 for every 100 miles you drive. If you're a long range driver, then that's, delivering parcels, doing, work, it's vans, it's so many aspects of this. It affects an enormous amount of people. So would you still go electric at this point?
I was never going to go electric.
You're petrol head.
Well, it's not actually. There's quite a lot of work that says that if you fully do the whole supply chain of 12-year-olds in Congo digging out the cobalt and that, if you really, really fully interrogate the supply chain and also things like if you use fossil fuels and transmission lines where you lose like 12 or 15% of the electricity of the power on the transmission line to finally get to the EV, it's absolutely not a clear-cut thing that EVs are better for the environment than efficient petrol or diesel cars. And that's a fairly controversial thing. I'm not saying it's definitely true, but there are big question marks about that. And actually, the other one that often doesn't get talked about is EVs, because of the weight of the batteries, are structurally much heavier than a like-for-like normal car, old school car. That's doing enormous damage to our roads. So that's got to be costed, all the asphalt replacement, all the redoing the roads, and it's also really bad for the most polluting thing in an automobile, which is tires. So EVs run through tires far more quickly than a like-for-like normal car. So I've never actually been. I've always thought, look, I think one day the direction of travel is really encouraging. I think one day, China's fairly inspiring on that front, but then how many coal-fired power stations that China got that are supplying the electricity that drives all those EVs? Again, it's kind of a nonsense, right? But what I would say as well is, and having never owned one, correct me if I'm wrong, but haven't EV drivers had a massive advantage over conventional car drivers of late because they're not making the same contribution to, like,
tax?
The roads, right?
Yeah.
At all. So I do think. My next door neighbour will kill me because she was talking about this morning. But, I think harmonising that not least given EVs destroy roads faster than normal cars. Yeah. They're so heavy.
Yeah, I think it was more the framing of it, I suppose. And, it just felt like another, we're doing this. Whereas it would be like, hang on, let's treat everything with
Well, it's also a volt fast, right? Because, this is the government of net zero. And it's like, well, actually, if you've been a good actor and you believe, and that's one of the reasons you drive a Tesla, now you're getting screwed.
That's the point, right? It's actually very similar to the salary sacrifice conversation of what behaviors are you trying to incentivize, and what coherent policy do you have to drive people towards those behaviors? I did think that the government wanted to move us all towards electrification, but just judging by that policy yesterday, that doesn't look particularly kind of coherent to me. So as I say, what behaviors are you trying to incentivize, and therefore incentivize them rather than tax them?
Yeah, it just seemed odd because they said, we're going to invest loads into charging stations and ports across all the motorways and across the whole UK. But also, if you do drive it, we're going to also make you pay for it more. And it's a lot of countries have been doing this as well. They've been getting rid of the tax reforms around tax breaks or advantages to owning an electric vehicle, when it was posed as this
if you want to go conspiracy theory on it, is it because they've woken up to the fact that AI and everything else are going to hoover up so much electricity, we need to get all these electric cars off the grid as quickly as possible? Or we're not going to have AI unless we have 50 new nuclear power stations in Western Europe and America, which is the other option.
Yeah, I saw a tweet about nuclear power and it not being addressed in the budget, and there was a lot of people quite annoyed about that and online.
Actually, this is I don't think we've come onto this at all, but power generally. So there's this brilliant. So I was reading a piece recently about how basically for the last 2 centuries, the closest correlate to prosperity in any economy is power. Is power prices. And the whole industrial revolution was a complete shift in how we interact with fossil fuels, and we go through coal and steam, and then we moved on to electricity and uranium, blah blah blah, and basically the British Empire was built on coal, the American Empire per se was built on oil, and on, and everything we're doing in terms of policy is having no impact whatsoever. Because to make the best progress for the environment, you need to burn a hell of a lot of fossil fuels to fund and deliver industrially all of the renewable stuff, and also smart stuff from AI and new material science and everything else. So the way that we solve all of these problems, big picture and long term, is actually by using a shitload of fossil fuels. And China knows that, and that's what they're doing, right? So little old UK, which is like the square root of, I say the square root of fuck all, to global emissions, like wearing a hair shirt and destroying our North Sea oil industry, is absolutely the ridiculous policy, and is part of another reason why Britain is in the pickle it's in, because we're not impacting the environment. We're retarding our ability to do a better job for the environment further down the road because we're unable to move as fast as China is at the moment. And we're, in the meantime, we're making basically look at INEOS, most of Britain's heavy industrial businesses, look at British Steel, are completely fucked.
And they've said energy prices are going to roughly fall by £150 per year, but then the energy price cap increases.
Well, they should do, given that gas wholesale prices have fallen massively, and Ed Miliband keeps trotting out the absolute outright lie that British energy prices are high because of global fossil fuel markets. Complete bullshit. Demonstrably complete bullshit. I mean, this is why I get agitated and I'm getting all party political in this conversation, because I've never seen such dishonesty. Outright lying, straight to camera dishonesty from the leading politicians of this government. It's just nuts.
And it's safe to say that Kemi did call a lot of that out yesterday. She blatantly said, here is your statement from this time, here is your second statement from this time, and here is what you're doing now.
So did Beth Rigby, right? Loads this week. Actually, can I pose a question to us, which is like, because my wife made the point to me this morning, she said, my God, if Kemi Badenoch, if somebody spoke to, if a professional woman spoke to another professional woman in a law firm or a bank or on a construction site, and what in a normal business setting, the way that Kemi Badenoch just spoke to Rachel Reeves yesterday, I mean, surely that would be like a sackable offence, right? Or fisticuffs and a very big HR claim. It was truly extraordinary. I think it was absolutely merited, and I support it because it's that bad. They've been that dishonest. They have to be called out for being that dishonest, is my view. But I'm interested in your views, because I thought it was pretty. I think it's unprecedented. I don't think it's ever been that aggressive at the dispatch box.
I think it was some points definitely were very contentious.
Mocking her voice.
And the few personal claims in there and things like that. I didn't agree necessarily with that, but it was heated and she was going, and I thought largely 90%, 95% of her argument was bang on, because she was just calling bullshit.
Yeah, correct.
If any normal person tunes into BBC Parliament, or realistically they do it on a day like yesterday, just generally it is so dispiriting of how we do politics and policy in this country.
Our whole WhatsApp group was like, these are kids.
Yeah, exactly. It's so adversarial. It is theatre, exactly as you say. There is a distinct lack of seriousness in my opinion, and I get the whole idea behind opposition politics is you've got to pick holes, and you guys are saying Kemi did a very good job of doing that kind of yesterday, but it just does not feel like a grown-up, mature way to arrive at policies that will help this country.
It's so funny you say that, because I've been saying that for years, right? How it's the thing, but yesterday was the first time I just thought, no, somebody has to be that aggressive with these people because of the unbelievable, breathtaking level of dishonesty. And I found it really refreshing. But there's an interesting point. So my first ever job was I was an intern on the Hill in Washington, D.C. And the US Congress and the US Senate are both circular. Yeah. So is the European Parliament, so is basically almost every parliament in the whole world is circular to engender consensus and non-confrontational politics.
Yeah.
The Commons has two, I think they're either green or red lines, which are a sword's length apart on either side because they used to literally
traditionally couldn't stab someone by
and Britain's always been like that. But yesterday I would tend to agree. We want consensual politics. We want the best possible policy for the largest percentage of the population.
100%. Look, we could probably carry on talking about this for a while, but we're coming to a close here. So I think what I would love to know from you guys is like, what's big on your agenda for now, and like, how are you going to move forward from this, especially from a Moneybox perspective, and equally as well yourself, Andrew, from a content perspective.
I'll go quickly. I think given the jobs that we do, we are cursed to have to pay attention to this stuff, right? The man and the woman on the street generally doesn't pay attention to politics, and I would argue they're probably happier because of that. Now, there is obviously questions about the long-term direction of this country and the policies that are being undertaken at the moment. But what I will be doing with Moneybox, our customers, with the content that we create, is trying to remind people that they can still hit their financial objectives. They 100%. Can still buy a house. They can still retire. It is crucial that people don't just throw up their hands and give up because of the narrative that is out there at the moment. Mm-hmm. I did a internal financial education session with the Moneybox employees last week. I have a secret goal that I want us to be the most financially confident workforce in the UK so that we can go out there and spread the word. And one of the things I said is, because of the job that I do, I've got to pay attention to this stuff, but you don't. The politics and the policies will either be a headwind or they will be a tailwind, and it will be 5 or 10% in either direction. The most important thing is what you do with your finances, that you are consistent with your savings, you are consistent with your investing, you are consistent with your pensions. You do hear, especially when it comes to pension policy, I mentioned it earlier, people just saying, it's too complicated, I'm not going to bother, it's getting worse and worse in terms of the benefits of saving into a pension. Even if it gets slightly worse, the far bigger impact is you giving up and not trying on this sort of thing. So what I will be doing, as I say, for the weeks, months, and kind of years to come, is reminding people that all of the tools are still there for you to hit your financial goals. And if at all possible, if you can ignore the politics and the policies of this, please do, because you'll probably be happier.
Yeah, absolutely.
I think that's brilliant. And I would totally agree philosophically. I mean, this is what we always say, and I think I said it right at the beginning. I try to do evergreen content. I try to talk about stuff that's worked since capital markets were invented, right? And to your plus or minus 5% point is really well made. Set against that, we have a sort of cheesy Californian stated company mission, which is to improve the financial affairs of as many people as possible. That is our stated explicit goal as a business. Mm-hmm. And in an environment where policy decisions are being made that are massively prejudicial to people's abilities to do that, to improve, there's still going to be a way, but it's a hell of a lot harder if you've just lost your job.
Yes. Yeah.
It's a hell of a lot harder if your eldest child's just graduated from university and has sent out 2,000 job applications and cannot find a job. That's a real life example. Like, I know people who've done hundreds and hundreds, and there just are no jobs. It's really hard if you're not particularly wealthy and you struggle enough to do a pension, and certainly not a stocks and shares ISA. Yeah. If your electricity bill is now too high, or if you're rattling around in a big old house that you bought, like I say, in the 80s, and your kids have fled the coop, and you and your husband, your husband's got dementia, and you don't have a big income, and now you have all this mansion tax to pay or whatever else. So I totally agree with you. I think notwithstanding all of that, everyone should do their absolute utmost to grasp the nettle and understand this is something they have to sort out. Because that's the other big thing, is that we have a real tendency in this country just think, oh, no, it's all right, the government will just pay for me, and they just can't afford to structurally.
And that's what I was getting at, is that we, as in around this table, should be trying to engage with the government on politics and policies to make these things better. The normal kind of person on the street, as I say, the crucial thing is that you keep trying, you keep doing your best with the policies and the products that are already there, because it is still possible, despite the narrative out there, to hit your financial goals and achievements. Yeah.
Wicked, gents. I've loved this. Thank you so much. And
great to see you.
We'll see you again soon.
Thanks for having us.
Thanks a lot.